Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having a fantastic day. We're going to take a look here, of course, at Bitcoin, help you understand best practice and big picture, and thank you so much for your patience over the last couple of days to not only my community, but my subscribers as well. A lot of my subscribers, in fact, I don't think any of them really know that I had a pretty crazy incident here recently, and I can definitely share that with you. It's not a pity party, just kind of the way that things worked out, and kind of go from there. So thanks again for your patience. If you'd like to know kind of what happened and you want some gruesome details, I can explain later. But simply put, my dog and I, we run every single morning. We usually do a mile or two run. We turned a corner, two pit bulls bum rushed us. I've lost the use of my hand almost completely for the moment. 4 deep lacerations and like a bunch of stitches. Thankfully, no surgery. So I think the worst is definitely behind us. And my dog did survive his surgery, and he's recovering as well. So, all in all, best case scenario for a worst case scenario, if that makes any sense. I deeply appreciate all the sentiments I've received here, and thank you so much to everyone for that. All your thoughts and prayers, I think, have been answered, and I think the worst, again, is tentatively behind us, and we should be on the road to recovery. So just know that this implies that you're going to have to deal with me using my left hand for a mouse. So it's going to be very interesting. We're going to see how retarded I can get. I'm already kind of retarded, but this would just add to that, right? Anyways, let's just go ahead and try to see if we can have some fun and learn something new here today, and try to bear with me if I'm not moving as fast as usual. All right, so straightforward here with Bitcoin. We had the nice 2 strong days yesterday and the day before, followed by a red day today. Majority of this is coming from traditional markets. You can see a gap down in NASDAQ as well as S&P, and big surprise, dollar index is retesting its most recent high, working as a support level. Big surprise, it happens all the time. So, again, Bitcoin's behavior today, the shorting aspect of things, I believe our community is shorting the heck out of Bitcoin, if I'm not mistaken. We're looking pretty good in that regard. In fact, let's see if I can find it here. We got some pretty healthy shorts. There's one for RSR. If we take a look here, Bitcoin, Zach is tearing it up on Bitcoin shorts and longs. So again, really cool stuff here in that sense. And obviously, if you're not using BitGet, absolutely use the link in the description below. I do have an affiliation with them because they offer, They offer futures trading in the United States with basically leverage without a VPN, and it's really uncommon. So if you want to benefit from some transfer bonus cash, go ahead and click on that. And that's again in the description below, likely in the comments as well. And then what we want to look at, of course, is kind of some standard stuff as far as support and resistance levels. We can see obviously the key Fibonacci retracement level, the 0.5, right there at 20,476, round number 20,500, is essentially a resistance level. Okay, obviously, no surprise there. The price came up there and kind of got rejected. It also came close previously as well to 20,400. So we can assume 20,400/500 is a strong resistance zone. And we can also assume, too, that 19,800 to 19,900 is a strong support. Okay, so we've got 2 zones the price is kind of stuck within for the moment. Obviously, today we should see a definitive direction choice. But to me, at this point, we got to give this area a potential, at least give it some time to try to do its thing. Okay. In other words, try not to just jump right in, depending on the type of trader that you are, based on the fact that it's just bouncing off a support level. Just because that's worked really well as a resistance in the past doesn't mean it's going to affirm itself as a support today. So again, that's generally what we're looking at there. Not terrible in that sense by any stretch, but I would say more positive than negative in that regard. Let's see if I can do this. So simple moving averages, we're getting rejected tentatively off the 50, and this is a very standard occurrence. It does reject quite frequently in most cases. So as you can see here, my circles are terrible with my left hand. We're basically just getting rejected by that. But here's a cool thing, and let's check this out. Big picture, this descending trend, if you see this red line, this is essentially, hey, that's not bad. This is essentially a strong resistance level in the past. That's basically the price action has gotten rejected there multiple times. Okay, in other words, the bearish divergence that we have in the overall sense of things. Let's see if I can show you this in the big picture. Oh, geez. All right. There we go. Okay, yeah. So we got 69,000, 48,000. Retest here, of course, again at 22,700. And then the most recent attempt broke through. So if we can kind of see this here, you can see that we've, come on baby, there we go. We've broken through this level. All right, so I'm trying to celebrate that in that sense. That doesn't necessarily mean that we're just going to go crazy bullish from here. It just implies that the descending trend might be over, which does help us understand that, you know, the 17,600, possibly that 14,000 range that we've all been talking about as a potential reality is less likely. Not to say that it's never going to happen, but it is less likely in that regard, okay? So again, let's turn off these moving averages. They're making things ugly. Let's look at the RSI. We can see price is up, coming down to potentially bounce off 50. This is a fantastic sign. This reaffirms the fact that 19,800 is a support level. Okay, so the likelihood of the price action continuing below that without massive selling pressure or the dollar index spiking up, traditional markets gapping down again consistently, just say tomorrow and or Friday, then we should be in a position where the price should bounce off 19,800. So I'd feel more comfortable taking a long than a short right now based on that sentiment, but that is never a reason to take a trade, okay? And what I mean by that is just we got to wait for confirmation, and typically confirmation to me is waiting for the daily closure for that to occur. All right, so that's generally what we're looking at there. The daily looks fairly fantastic. I would say more positive than negative, but a closure above that 50-day simple moving average would be advantageous. We can see the price, again, wicking down here, bouncing off. RSI is tapering off, which is nice because it was a bit on the overextended side last night, and it's coming down towards 50, as well as the MACD potentially diverging. Now, this is something we want to pay attention to. If we get a bounce at 19,800, this isn't going to matter, but in the general sense of things, it's absolutely still something we want to pay attention to. And what I mean by that is a MACD divergence, when they just say this is the 26-day moving average, and when it intersects with the 12 in a downward fashion, essentially, what it does is it gives us the identification that the price is losing its potential support and that it's mostly becoming bearish. So we still have this bullish momentum that's working. It's just that in the last, well, as we can see, in the last 24 hours, we've had that divergence, so to speak, where the bulls have lost their control. Again, not completely lost. It just implies that with this downtrend here, this momentum to the upside is dissipating. And it's fairly standard and normal for this to happen. So please understand that these natural ebbs and flows where you have higher lows is extremely normal and very relevant, something we want to have happen. Because if the price can consolidate at 19,800 and then leg up again from here, we're not only making higher highs, we're also making higher lows, okay? And those are important things we want to recognize. So in general, I would say we have more positive than negative here, except for obviously the fact that we want to pay attention and see what's going to happen soon. If we do have a divergence, a strong divergence on the MACD, then obviously we're going to be losing the support level and we need to kind of reevaluate things. But for now, I think we're on the up and up there. Moving averages too, here's a great thing. Look at the price wicked perfectly down to 19,800. The 200-day sub moving average on the 4 hour is averaging itself out right at 19.8. That to me is a very strong positive sign. So I think that we're mostly in good shape here. Again, I'd like to wait for confirmation, but all in all, I think we're looking pretty decent in the overall sense of things. You can also see we're getting fairly exhaustive to the downside. Came down to a 6, got a reset plus a 7. So even though these aren't 9s, when you have continuation of the downside, just say 7, 8, or 9, and you see that consistently, maybe 2 or 3 times in a row, then that is cause for us to essentially, kind of make sure that we're paying attention to how low the price could go, but the likelihood of it bouncing from there. Okay, so to me, seeing us at a 7 here, close to the support level, tells me we might get a bounce around the 19.8, 19.9 range, which is very much what we might be seeing right now. Let's take a look, of course, at the cloud, kind of see where we're at. We should be above, and look at this. This is even better. We can see the upper and lower lead are effectively working as support levels here. Okay, so that's a good sign in that sense. That really just helps us understand that we should be in pretty good shape to allow for that to bounce. Now, granted, the lagging span is free and clear price action on the downside. That's typically a bearish sign, and the conversion line is below the baseline. So this does imply that we're still on the way down. Okay, so in that regard, when you take a trade just based on the Ichimoku cloud alone, I would say you have more favor towards the cloud versus the lagging span and the other 2 indicators. In other words, I would put more faith in the price action being above the cloud or staying within the cloud and not losing that lower lead than I would the other 2 indicators. But the truth is, if you had a long position, you should have taken profits by now. That's basically what it's telling us. Because what was it, maybe 6 or 7 hours ago, it would have told us to take profits based on these 2 things converging, as well as the price action intersecting with the lagging span. So again, I teach all that stuff in my trading university, so obviously if you're not familiar with what I'm talking about now, please feel free to become a community member. We've got over 200 active members right now, and I can tell you what, they are the most amazing people that I've dealt with in ever, probably. I can't believe it. Like, so many cool, awesome, good traders all together in one place, and not only are they super, super supportive and very kind, but they help each other, and we all learn and grow together. It's a really cool, awesome, collaborative environment. So, just something I never would have imagined in my wildest dreams that this would be, this would be part of my life. So again, thank you all for that. So let's go ahead and wrap up here. What we want to look at is, last thing would be just TD sequential. Oh, whoops, we already did look at that. Sorry, see the meds, not good, not great. All right, so let's, okay, last thing to look at is just the volume weighted average price and see if we are outside that deviation, which we are. So again, that's why we're seeing the price kind of pull back and bounce off that support level. Based on the volume in the most recent past here, we can see 20,000 should be where the price action should be, and it's below that. Not only is it below that, which works as a resistance level, mind you, we can see that we dropped below the standard deviation, really just implying that based on the amount of volume, the price should be within those lines, and it wasn't. That's why it's correcting itself to the upside in the last 15 to 20 minutes, or 15 to 30 minutes. So in that regard, I would say in this case, we should experience a bounce here in the near future. Like if I was day trading right now, I would have obviously been paying attention to these things, and then, potentially taking a position. Now again, this is not confirmation. You've got to understand that. The fact that we are underneath the volume weighted average price line does imply it's going to work as a resistance. So the price comes up, it could very well get rejected and push itself down to create consistent lower highs and lower lows. But once again, we're not overextended to the downside yet, so there is still potential for further downside. But those moving averages averaging themselves out at 19,800, to me, just seems a lot more appropriate for I would say just a long versus a short position at this immediate time. Again, waiting for confirmation, I would recommend doing. I'm going to do that myself. And if we get the price to kind of just hang out and consolidate at the current price point, I think that would be positive, especially if we can close the trading day with that. So those are things I'm looking for, honestly. I hope that you learned something here today, of course. Thank you so much for joining me and dealing with my my inaccuracies. And we'll continue to adjust. I'll probably get better with my left hand, and perhaps my right hand will recover a lot sooner than expected, and it'd be really great to have the use of these fingers. So I hope you have a great rest of your day. Once again, thanks so much for joining me here. I hope you have a good one. We'll see y'all in the next video. You take care now. Bye-bye.